Oh yes, legends. Now, yes. Second try. Let's see if we succeed. Much love to everybody. Hope you're doing fantastic. We'll be analyzing this little drop that we got on the price of Bitcoin and see what is going on next for the price. What are we looking for? When am I looking for long positions? Of course, I'm very, very interested in those long positions. Happy in short positions at the moment. Yesterday, Devil provided an epic short position, been taking most of the profits down here. That was a short position that was provided inside of the trading community at this zone, and still holding that short position. Part of that short position, of course, because I do see this zone holding the low 66k region. I'm very interested in a long potential. I'll be explaining that in today's live stream. And where we at currently, when we do get the volume profile of the entire range, we're kind of trying to hold that massive big point of control that we do have in this region. We can see how we got that big major reaction. We kind of sitting just at the point of control of this entire range that was formed in 2024. So we'll be discussing, can we hold it? Can we take out 72k plus in the next coming days? And can we bounce here in this region? I do not want to see the price losing this low right over here. So this is the territory where we need to see some support, some proof of support, or at least a bounce, which will invalidate the local impulsive move to then take that long position. Regardless, if we do not catch the low, we can potentially jump in later on. Much love to everybody. Smash up the like button if you do enjoy the content, and we'll go right away through the comment section. Sorry about the first attempt, guys. It did not work. It did not work. I'm not sure what happened there. My microphone was not working. Everything was plugged in, and I forgot to put the time for the comment section as well. We're getting lots of spam of some rocker token or whatever. Anyway, we got the 5-second message here, slow mode, which is activated so we don't get that spam. Much love to everybody. Let's go. Stanko, much love, my man. Let's go. Axikuno, hello Andy, what's up, bro? Everything is cool and good. Distant music. Is the live stream starting or no? It is. Patience, just like trading, right? We need patience, right, to actually detect those movements. Sorry about that, my bad. Okay, distance music. Boring market. It is a boring market. We are a little bit rangy when we zoom out on the higher time frame, okay? Throughout the last week, we've been very rangy, but I have to say, you know, ranges for trading is actually pretty damn sweet. I actually like to trade ranges much more before. In the past, a few years ago, I was very much of a range trader. So, I mean, yeah, I mean, we can have fun inside of the range. This was such a good shorting trade. I mean, we discussed this on the live stream a few days ago. It's just so good. Such a good trade to be taken because, I mean, you know, from this correction, if you pump here, you know, if you're expecting the market to move up from this straight correction, I mean, you need to do a little bit of more Fibonacci and Elliott wave studying because, if, you know, it was too short in time, very straight. You know, very nice impulsive move to the upside here. You know, if you get that bounce here, especially with this consolidation that we had, I mean, yeah, this was a fantastic opportunity short that we had on that bounce yesterday at $70,000 to take that, you know, intraday short position. We could still have some of that short open, of course. And here's where we want to see the slowdown. Here, I'm in no rush to get into it long. I have to say, I'm very much in favor, as I was saying with the trading community, that I do see a very, very good chance to take out this $70,900 range. That doesn't mean we instantly long wherever the price is. We give many scenarios. A lot of the scenarios that were explained today was looking for a movement down into this low 66k region. Now it's where we need to focus. We need to focus on this because remember, we were also studying this little downtrend and we were ready for the possibility of a WXY double zigzag, finishing with this zigzag right over here at the 65k region. I think we could have something very, very similar here All right, unless we're forming a triangle eventually. If we form a triangle, we could be dumping later on. But we're still looking for a possible bounce. So I will be explaining the lower time frame here, because this is actually really good zone where we want to see the price dancing around a little bit, right? Dancing around. You can see here after a drop right over here when we were coming down to the 65k region, right? And that's coming with the, zigzag, WXY structure that we were talking about through last week. You can see how the price stops here and starts dancing, right? It trades here for a few hours. I want to see some kind of a stop in this region, which, we're already stopping on the lower time frame. That's a first initial good sign. That's a first initial good sign, but it's the first hour just after this recent drop that we got. So a little bit of dancing momentum here that we had right over here, because that is the moment we got a very valid count for a finished structure or coming to its end stages, just like we had right over here. We had a very valid count coming to its end stages. You know what happens, right? This is bearish. We're going to go lower and rest of it. It's very possible, maybe this could have got follow through. Same as here. Maybe this can get follow through. But the next few hours is going to be absolutely crucial to take a long decision here. Because then, in the next few days, you do get a pretty significant rally. And I think that a significant rally from this point could happen to take out 70,900, right? This movement hasn't happened yet, and the long trade is not taken. I'm still remaining in my shorts. A lot of the times when I'm patient, I do miss a lot of trades as well, I have to say, because we want the very good high probability trading setups, right? Still remaining in the short positions that I have. I mean, this one's one that I compounded throughout the last couple of weeks. In a long trade on silver. I'm looking for silver to hold the $70 region. Still happy that's in a slight loss, but it's a bit of a swing trade as well. But the shorts on Bitcoin are activated still remaining short, but very interested in the longs. And I think in the next coming hours, I don't think it will be on the stream because it's still very soon. I'll explain a little bit what I want to see with timing, Fibonacci. Why am I thinking about forming a higher low from here, and why there is a good potential that we could take out, okay, $70,900. Worst case scenario, if that bounce does not take out 70,900, is that we get a corrective bounce here and we form that triangle, which naturally would be a bearish triangle, A, B, C, D, E, and then get the breakdown to $60,000. So we'll be explaining a little bit in detail all of this, guys, okay? So bear with me, stay chilled, stay tuned. Interested in longing, I'm explaining where I am going to be longing potentially in the next coming hours. If I'm still awake, I will be letting the community know inside of the Telegram. By the way, it is your chance to get a couple of months for free in the trading community in Telegram, guys. Send me a DM with the word access. You just need to sign up with one of the links down below, Bluffin, Velto, do a minimum deposit for your own trading, and you are in. And this short trade was provided by Devils, and I have to say it's a long, yes, at least a few weeks since I haven't gone so aggressive on a trade, but it was about time, right? Scared money don't make money, they say. So I was so confident about this trade. We actually anticipated this move as well on a stream a few days ago, which was actually looking for the impulse finish beneath this low, get the bounce, and then move down. We're looking for a three-wave structure to the downside. Are we getting to the end of the three-wave corrective move? Very, very possible, guys. This might be the moment where we need to get excited. It is true that we are holding the value area low of this entire range. When we do take a look at the fixed volume profile, holy smokes, we are back down here at the value area low. And I do want to see a higher low here. We do have an impulsive move here. So why not? Why not? Very choppy movement to the downside. Is this building multiple 1-2s? I mean, eventually there is that bearish case scenario. I'm sorry, I have to say. It's never 100% one direction only, right? We can never be like that, guys. Never be too confident in a trade. Always be a little bit cautious, even though I have to say this short was a lot of confidence in this short, I have to say. But this one, right? Are we going to get that bounce? We'll be breaking down Elliott wave theory, the levels of support. Well, the levels of support look no further. Value area low of this entire range. It's almost been, you know, almost 2 weeks right now, 12 days that we've been in this rangy structure. Value area low is very, very strong. Same as value area high. Muy fuerte. Very, very strong. So can we bounce from here? I do think that we do have a very, very good chance. However, we need to break down the 5-minute, guys. Not even the hourly or 15-minute. We are coming down to the 5-minute time frame today because it is crucial. The next coming hours, we either invalidate the internal wave 4 or we actually chop down here in the 4-5s to then get that big rally. Rally could start from here. There's no doubt about that. But we'll have to join in that long position a little later, okay? But it is very, very much possible. So let's go right away through any shorts. I think lots of profits should be taken here if you've been shorting either here, which was a very, very acceptable short. We actually discussed how we need to see the price action here after this impulse. We want to see those 4-5s. And, you know, on the 5th wave, remember the triple top scenario is what we look for the short. If you shorted here or if you shorted here, I'm not sure if you shorted here, but overall the shorts that I was very much looking at was the 4-5s here, or this one that was provided yesterday also as confirmation by Mr. Devil himself. Most of the profits, at least for me with my experience, have been taken and should have been taken. We like to leave a little bit open because then we are hedging against any possible long attempts, okay? Let's go through comment section. Now, yes, smash up the like button, legends. If you do enjoy the content, bear with me. We'll break down a little bit of the scenarios, but in a nutshell, I really want to see the price action slowing down here or take out the golden pocket from the latest move to the downside. That is literally coming to overlap the possibility here of a wave 1. This is a wave 1 low that I'm looking at. If we bounce from here successfully in the next 1 to 2 hours and hit that $67,700 zone, okay, it's going to be looking pretty damn good for the bulls in the next coming days. Let's go right away through the comment section. Say hello to the wonderful legends here. Daniel Singleton, Nico Sopi, how are you doing, my man? Tap the like button for the TA. Much love, Nico. Always here, giving love and power and moderating. Absolute awesome to have you, my man. All good, Andy. You here now. Thank you very much, my man. Crypto by Mattia CBM. Time to long. You know, hey. We'll leave this for the aggressive traders. And, you know, if I'm going to try and catch the low, right? Because I know a lot of people out there, especially the unexperienced, we like to catch the high wick or the exact low. I mean, we can detect them. This was a double top SFP, and we were very much aware of holding this zone at 65K region with a little consolidation. But, catching the low is challenging without a doubt. We are coming down here. 7-8 Fibonacci is not being hit yet, but the value area low is literally where we've at the moment, right? We're getting that reaction at the value area low at the moment, as you can see here, of the entire range since the 5th of February. So, I am favoring a lot to take out 70,900. If you want to try and catch the lowest price possible, hey, you want to get into long here, I would easily say that this would be an invalidation because, I mean, if you take out this low, I'm not too comfortable actually in long in here. If you take out this low, okay, it might form a little SFP and there could be an intraday long, but hey, what can we say? You know, is this a setup? I think so. You know, and maybe this could even take above $72,000. If we take out this high in the coming days, I'm pretty sure we're going to take out this one. Okay, that all has to do with basically, you know, this movement down. It's not looking impulsive. You know, if you get this bounce all the way up here, you're already coming up to the 0.88 Fibonacci, right? If you take out this high, you're likely going to hit the 0.88. You know, if you take out this high, you're very, very likely going to take out $72,000. So 72.2 that is. So, you know, is this already a good long attempt? The risk to reward, you know, this would take a few days to develop. Risk to reward is sexy. It is good. You know, the risk to reward right now here is about a 3-to-1 risk to reward. 2.5 if you're late. If you're going to long a little later, but, you know, still, would I say it's acceptable as a swing for the next coming days? I really like it. I kind of really like it. I'm being a little bit patient here. However, I will probably have to long a little later. If we get all the way up to 68.7, I would be happy to already enter there. However, my stop would be different. If we do get to 67.7K, you know, naturally we would want to see a retracement. That would just give you a better entry, but I would be already happy to enter with 0.5% here. So when you're trying to catch the, you know, the move down, you know, I always say you want a little bit of confirmation. Getting confirmation is getting a little bit of a market structure change and then the retracement, or you get a clear impulsive move to the upside, right? Then you want to go aggressive with any long positions that you've entered, right? So if you would have entered here aggressively, you know, I like to treat this as a 0.5 risk, right? I usually like to risk 1 to 2, maximum 3% if I'm going aggressive. This was 3% actually. This was aggressive yesterday, but it was so nice. It was, you know, it's one of those perfect trades that you like, where you know, kind of break this uptrend structure. You understand the timing. You know, if for this to do this, you know, it's highly unlikely. You realize that a 3-wave move here is high probability, which is what we are, you know, basically looking at the moment, right? I think this movement down is high probability corrective, just as this movement down is high probability corrective. This movement up is high probability impulsive, and you can also count this either an impulse or a 3-wave structure. It doesn't really matter. Doesn't really matter, because if it is a 3-wave move, we can look for a double zigzag here. Boom, boom, bam, right? Zigzag up, WXY double zigzag. If it is an impulse, well, you have 1, 2, 3, 4, 5. This could be a wave 1 or a wave A. It doesn't really matter. Corrective structure. This could be either the wave 1 inside of an ABC. So 1, 2, 3, 4, 5, right? And this ends up being the B wave, and this being the C wave. Most bullish case scenario would be a 3rd wave, and we absolutely explode out of nowhere. But, you know, as explained, this really doesn't matter. You know, this really doesn't matter. The one that matters the most for me is this movement down and this movement up. Okay, this is for me more likely impulsive, more likely corrective. Regardless if this is 3 or if it is 5, it can be counted on both waves. You know, you have a good chance to take out 72.2K on both of the scenarios, regardless if it's 3 or 5. So, you know, at this point, coming down, you know, and this, I like to see it. Worst case scenario for this is that you're forming multiple 1-2s. I'm not very much in favor here. Not very much in favor of this being multiple 1-2s. This movement down is very 3-wavy, and you know, I would label this as a potential running flat, unless you're forming a contracting that we're going to cover all of the scenarios. Don't worry about it. But everything is looking pretty spicy here. At the end of the day, we don't know what's going to happen. We can literally map the situation and say, okay, you know, I actually prefer that we do take out 70.9 and actually 72k rather than breaking down beneath this low at 65.1k. Based on the information that I have in this region, I understand that the probabilities are leaning a little bit more to the upside. So, you know, obviously I want to trade it, right? I want to trade it. As you get the movement down, you never know if the movement down is going to increase in volume and you're going to capitulate. The good thing about this is that we do have some support levels, right? People that don't use Elliott wave theory, you know, would just say, well, we're coming down into the support here at the value area low, and I'm just going to long the support, basically, right? I'm just going to long the support. Hang on a second. Anyway, let me just double check a few things. Let me know if you can hear me, if you can see me, legends. Microphone is on. 1 second, guys. I just want to confirm something here. Right, okay, yeah, sorry, my bad, just thought I had an internet connection issue here. All right, okay, so sorry guys, sorry about that, got distracted there. 1 second. So yeah, anyway, the thing is here, we know that risk management is the most important tool that anyone can have. It's not on Tradingview, it's here, right? It's you and your, you know, it's basically yourself that needs to not go with the emotions and go in too heavy on every single trade. So in this case, would I see this as a valid long? I would say, you know, this is an aggressive entry. It's aggressive. You're moving down, you know, even though the probabilities, you know, for me are leaning higher to take out, you know, and this obviously is giving you that better risk to reward, right? It wouldn't make sense to long here, or it wouldn't make sense to short down here based on stop losses, right? Risk to reward in this case, right? If we are correcting here, and this does look corrective, this does look impulsive, you know, this is what we wait for, right? We always talk about, you know, we want to see an impulsive move to the downside and a very choppy, overlappy, okay, corrective move. You know, we kind of have this right over here. This is what we wait for, right? As we do Elliott wave analysis as well, coming down into strong support. We are impulsing up, likely corrective down, and we're coming into support. You know, naturally, if you're coming back down to the value area low, you want that low here to be, you don't want to take out this low. If this is going to be impulsive and corrective, you don't want to take that low eventually. You want to form a higher low in this region. And where would you want to target? Well, I would want to target the highs of the range eventually, right? That value area high. We got that point of control that was acting as resistance today. That's where we got rejected. Point of control of this range of the last 10 days. I mean, I didn't short here. You know, I was already in the short. Would have this been a good short entry? You know, based on resistance. If you are looking at the lower time frame, and just to point out something educational, right? When we do look for that impulse, guys, we can see how you're moving up here. You have a correction, then you move up here strongly, and then you have, you know, shallow pullback, and then you grinding to the upside. When you look at an impulse, this is literally what you want to see. So, you know, if you're detecting those fifth waves into this zone at the point of control, you know, say, you know, you are coming into solid resistance. We could see that yesterday here. Is it a good short? You know, yeah, it would have been an okay short, actually. You're detecting that fifth wave, at least down to the 50% of this movement. Just giving some trading ideas here, right? For we always mix education as well, right, with the possible scenarios. But anyway, this would be the name of the game at the moment for the next coming days. If you ask me, this is a valid zone of support. 7-8 Fibonacci was missed by a few $100s, but still you're hitting that value area low of this trading zone. This movement to the upside does look more impulsive. This for me is preferred, counted as corrective. We will have to cover the bearish case scenario. We have to cover it. I am currently not in that long position, okay? But I will be interested in getting in, and I will be explaining right away on the 5-minute time frame exactly what I need to see. So then I'm confident that the probabilities are even higher on my side to actually pump up in the next coming days to $70,900. I mean, that's, you need to be confident and come online if you are going to be. You need to be confident, right? I'm actually quite confident about that. However, I want those little confirmation bits that could be happening here in the next coming hours, right? Because when it goes, it's gonna go. It's gonna go, right? And you're gonna have to FOMO in, right? Or maybe not take the trade. I don't like to FOMO in, but if you don't get in this region, then eventually you don't want a long really here, right? You don't want a long when the market is already, you want to start looking for shorts, preferably, right? So is this the moment? Is this the moment that we form that low and we start rallying here in the next coming days to tackle 70,900? Let's break it down, okay, on the lower time frame. I still have time. Let's go through the 1 hour or 15 minute. Let's go through the 15 minute. Let's go through the 15 minute. Or the 5 minute. I'll let you choose. What will be your confirmation? Confirmation is kind of happening at the moment right now as we speak. So we've taken out this low. Confirmation is happening here as we speak right now. So yeah, this is why, and I'm gonna be a little bit patient to see if we see some kind of a pullback. I don't like to long exactly on the pump, but yeah, literally for me right now is kind of a confirmation right now that we do have this as a corrective structure. One of the main reasons is because this is from this movement right over here. I'm going to start off with this movement, guys. There's so much into it here. This move to the downside, and if you are in any shorts, this is why, this is a reversal potential at this moment. I would say, take most of the profits. Devil was mentioning inside of the community that it is time to take some profits and look for long positions. I'm in that short and I want to keep some of this short position to hedge against my, long attempt, which I am going to be taking very, very likely in the next couple of hours. I'm going to remain patient, right? Because this is a larger move. Whoever got into the falling knife or to the value area low, right, aggressive long, right, it is aggressive, but holy smokes, we just tapped into that value area low of the range since the 5th of February here, and I would treat this as a swing long, literally to take out. This is going to take a few days to develop. I know there's a lot of people that want scalps, and there's a lot of scalping channels out there where you move $200 and you're already getting out. We do higher time frame analysis to look for the bigger projections here. So we're in no rush. We're in no rush here to jump into the trade in this case. But this long for me is to get back up to the value area high of the range at 70.9k with a good chance to break a few $1,000s above 72K. So, you know, we're looking a little bit of more upside here. When we do go with the, what am I looking at here? What am I looking at on the lower time frame? What happened? What happened here? When we do analyze this movement to the downside, for me, it's a very, very clear three-wave structure down. It is very, very clear that it is a three-waver because, you know, when you zoom in, this was the rejection that we had yesterday at 70K. You got a big move down, a little consolidation, and then another biggish move down. No follow through, no five-wave structure. Clearly a three-wave move because you literally got this. Now, because we had that three-wave move down, and with this price action that we had throughout Sunday and Monday morning, right? You have this also being a three-wave move. If you have a three-wave up and a three-wave down, and you move up like this in an impulsive move, you know, we are looking at a potential running flat. Now, you know, when we do discuss about the bearish case scenario, I mean, the bearish case scenario would have to be wave 1, wave 2, and here another wave 1 and another wave 2. However, how the price has moved down from here to here is, at this moment, we didn't get follow through here to get 4 5s. What has happened is that we got this movement. I would say that this could be an ABC running flat also, and this movement down. So as it stands with this bounce, you know, we likely have a three-wave structure here also. You know, this is looking corrective move to the downside. If you have a corrective move to the downside, you know, you're really looking for a high probability move to the upside. Likely to take out this high and maybe even this high at some point. Different combinations that we would have here. Different combinations that we could have. Yeah, this is going to be an interesting one. This is going to be an interesting one. ABC flat, zigzag. Zigzag, yeah. One of the scenarios that I do like very, very much for this to be completed. One of the scenarios that I do like very much for this to be completed right there is a potential double zigzag. However, I'm having a little bit of an issue here because we do have that impulsive move right there. Correction, zigzag. We would have to fit some kind of an input of a zigzag move here, even though this for me does look very, very nice as an impulse. It does look very, very nice as an impulse, but you know, I would assume that we can fit an A, B, and this being the C wave, just because what I want to fit inside of this movement, as there's so much overlap. Right, I got it. I got it. Yeah, one of the scenarios here that looks pretty damn attractive, depending on, it's all about how we move up as well. I need to zoom out on the 15-minute time frame. Bear with me here. Bear with me because I'm getting all of these. I do have it on the folder, but I like to freestyle here with you guys. This movement to the upside that we had from the lows does for me clearly look more as an impulse. Either with multiple 1-2s, the third wave, high volume, and then the 4-5, 4-5, right? You either have this scenario, 2 1-2s and 2 4-5s finishing an impulse. The other scenario, which I had to double check right now on the folder, which I do have here anyway, but is this right over here, where you have the 5-wave move finishing here instead of here, right? And you might think, well, why aren't you finishing your 5th wave right there? Because, you know, you can count a double 1-2. I mean, there could be, you know, all of this. There is a little 4-5 here. You got 1, 2, 3, 4, 5. You can finish an impulse here. There is a way of finishing the impulse here also, right? Sometimes Elliott wave theory can give you, you know, 2 options on that same wave. And that's why the next wave is the most important for the probability side. So when we do consider this being the impulsive move, all right, and we want to detect a corrective structure here, right? Because now what I was struggling was, this looks like an impulse. And if you have a flat, running flat here, well, you need another impulse for your wave C, right? You need also another 5-wave structure. We've failed at the moment to get follow through on the 3rd wave, the highest amount of volume move. Then you want the 4-5s coming in, because here you could form an ABC. Right over here, you could get an A, B, and a wave C. Wave A, 5 waves down. Wave C, 5 waves down. However, we've got a little bit of a V-shaped recovery here, local V-shaped recovery. So that is not possible. We cannot fit a C wave here at the moment. And I did get a little update today in the community about the other scenario that could play out. That other scenario, instead of finishing wave 5 here, you're finishing wave 5 here. Because as we do have this impulse down, you can form, and this does look a little bit 3-wavy, I have to say. What we would be looking at here is a flat move right there. ABC flat. Okay? So you've got that ABC flat right over here. Then you have another ABC flat right over here. Running flat in this case. And then what we would be looking for is the zigzag, which is what we could have right over here. You might think, what is all of this bollocks, right? What are you on about with all of these waves? Why ABC here? In a WXY, you can have wave W being a flat, wave X being another flat, in this case a running flat, and your wave Y being a zigzag. What is interesting about this is when you get your Fibonacci extension from the top of your wave W, because remember this is your wave W in a flat, right, expanding flat. When you get your extension from here to the low of W, which is the right A wave, the top of W is here, it's not here, to the low right there, and then to the top right over here of your wave X. Interestingly enough, at the moment where we got the bounce is the 1-to-1 extension. 1-to-1 extension is a common target, even the 1, 2, 3, 6 from a WXY. Sideways WXY also, you can hit the 0618 to the 1236 extension, but these extension levels, do get a strong reaction if you're looking for, either flat zigzag or a double zigzag, right? This is getting your wave W as a flat, your wave X as a running flat, and now your wave Y as a zigzag move to the downside. When you get your extension from the top of W to the end of W to the end of X, which is here, it's not here, the 1-to-1 is 66.6K, which has we've got a quick reaction bounce here of $1,000. If you are, I know Devil likes these sniper trades at these extensions when he is considering, because the good thing about this, if you're getting into this extension, by the way, yesterday was a Fibonacci target zone for Devil. He absolutely loves. I'm not sure if he's around, but he's like, the good thing about snipering these Fib extension, retracement or extension, doesn't matter. You could be in that long position already here, right? And you're already protecting. At the moment, as it stands, this movement down is highly likely corrective. As it is highly likely corrective, the probabilities of moving up are much higher for the next coming days. At least, to take out this lower high that we formed, yesterday. Because, yeah, you could continue the range, but it doesn't, the problem is here. The problem is here. So anyway, but, with this explanation, basically, I would be looking for high probability follow through here to the upside based on the local information that we got. Okay, so this is what makes more sense at this moment. I'm going to remain a little bit patient to get into the long here on a retracement. Doesn't matter. I didn't catch the low. This already is a very good reason for me to take most of the profits from the shorts that have been taken, especially the one here from yesterday. Most of the shorts have been taken. Most of the profits have been taken of that short position. And it's always good to have some of the short position if you want to get into that long position, right? Just in case it fails, you're actually hedging a little bit for that stop loss. So I see that movement as the highest probability move to actually pump in the next coming days. Is there a bearish case scenario, right? There always has to be a bearish case scenario. Bearish case scenario here would be forming a triangle, which I do have a little bit of a problem with this triangle, because this movement up does look more impulsive, and inside of a triangle you need corrective structures. 3-wave, double zigzag 3-wave. This does look more impulsive, so I'm not a fan of a triangle here and then breaking down, if I'm honest with you. I think low probability based on this movement looks more impulsive. So the probabilities, are likely that, we're going to take out this lower high in the next coming days. What else can we cover here? Well, it's all about, as explained before at the beginning of the stream, it is kind of valid to get into this long position. Obviously now, risk to reward is not that great, but in my case, I'm going to be studying very, very carefully this pump and the bounce, because if we are going to be taking out 70,900 in the next coming days, it's unlikely that you're going to shoot up right from here in the next coming hours. If it does get up there, it's going to move up like this, or it's going to move up you know, like this. It ain't gonna go up in a straight line. So my mission right now, if I did not catch the bottom, is to really detect that pullback corrective structure. That's where I need to, you know, join. So, you know, I have to say it's very, very much valid to already have been gotten into this long already, you know, with stop loss at the low. We were discussing today how in the community, you know, maybe some of the legends already got into the long, because a lot of the scenarios, by the way, that scenario was pointed out right over here. So this was, I mean, actually one setup already that was provided in today's morning update. And if you would have treated that one-to-one extension, right, because this is what we're looking at, right? We did get a little local bounce here today, and then we got the movement down. So we ended up forming as, you know, a possible zigzag here, because we consolidated in this range. And look, you know, the Fibonacci targets, you know, if anybody wants to take this trade, you're managing risk here. The risk to reward is very attractive. It's very real. It's a good projection. It's good analysis. We're looking at the technical local moves that could happen. And we actually bounced exactly, you know, where we had this entry when we were analyzing, you know, the chart here a few hours ago. You know, I'm not in this trade. I was looking for a little bit of a slowdown, if I'm honest. Devil does like very much to aggressively enter one of these fib targets if you have a valid count, which is either the 1-to-1 or the 1-2-3-6. I know Devil very, very well, and he's very, very successful trading these fib extensions. He treats them as a swing failure pattern. You tap it, you react from it, you enter, you get the bounce, you know, you already can protect the position. He does that very, very successfully. So, you know, based on this, you know, you could have actually already entered the 1-to-1 extension. When you do take a look at how we moved very, very locally here, because when, you know, these updates are given obviously a few hours in advance before the move happens. If not, it wouldn't be special. But we were trading in this zone. If you have a leg to the downside from here, you're looking for that B wave and then the movement down in a C wave. You might think, but here you have this boom, boom, bam, bam, 1-2. Isn't this a double 1-2? At the same time, this could be a wave A, and this could be an ABC running flat in your wave B, and that's your wave C. So, you know, at the end of the day, the idea here was to look for a zigzag to complete that WXY here. You know, that really does have that potential. And this is a swing trade. This is, you know, this would take a few days to develop naturally, because this is the 15-minute time frame, and, you know, obviously considering timing, this would take a few days to develop. But overall, 66.6k at the 1-to-1 extension from this, you know, speculative scenario that could develop is basically one of them, right? That could be the one that's actually unfolding here. So let's go through the lower time frame and understand a little bit of this movement that we got. I would be happy if we do get that pullback to execute that long position. So it would be nice to get a pullback here in the coming hours, right? Seeing this as a nice recovery, take out that high would be even ideal to then get the retracement, a little bit of a retracement here. I mean, if you change, oh no, we're not changing market structure here, unfortunately. I mean, you would very, very locally if you take out this high. But even if we don't, I just know the probabilities would be on my side here. I would not, you know, if we come down to hit 67.1, 67.2, I would be already happy to get into that long position. I don't like longing, even though it's a swing trade. We'll get that pullback here. And, you know, I would be interested in long in this zone. So, yeah, a little bit of the explanation here. I got, you know, I've got it in the on the folders here. Don't know why that's not loading, but anyway. Right, let's go through the comment section and see what the people are saying. I know Elliott wave theory just gives you a little bit of more data, basically, right? More information. It gives you more information on the chart, because I know, you know, some people might think, you know, we come down to the value area low. I'm long in here because we're at the value area low, and you know, you already accept the possibility of bouncing from here. I'm going to put stop loss at the low because I don't want to break this zone, you know, regardless if you understand that this is an impulse and this is likely corrective. Sometimes, you know, I like Elliott wave theory because it gives you a little bit of more of that edge, right? That gives you a little bit more of an edge when you're looking for the trading decisions and the probabilities. So let's go through the comment section right away. I have to say there's a lot of shorts entering here on Bybit, and this is absolutely wonderful. This is what you want to see. Lots of shorts with open interest, over 13 million shorts on the delta, trying to, you know, catch a lower high here. Very interesting. I think this is just going to be more fuel. So let's see if we do get that correction a little bit more deeper. The probabilities right now with these bearish CVD divergence are looking really good. On Bybit, they are shorting this bounce, and it is creating massive local bullish CVD divergence. Lots of shorts here that have a very, very good chance of getting trapped in the next coming hours, because I do expect higher. Anyway, let's go. Thoughts on BTC dominance? Wow, let me go through the comment section. We can do a little bit of analysis. I'll be updating, of course, later on, because we, you know, cannot miss this long trade. Cannot miss it. Cannot miss this swing long. And you know, all of the confirmation levels have been literally triggered. There is one scenario that actually takes out the low one more time, and I have to give kudos here to Devilt, because even though if you would have your stop loss still here, you would be fine, but there is the potential taking out the low one more time. And I need to give kudos here to Devilt, of course, because it is the potential of a contracting diagonal here to finish your ABC. So in this case, instead of looking at a WXY, you're looking at an ABC. That 5-wave move does finish here with 445, with 112s, 445. However, you have your impulsive move in an A wave, the B wave right over here, and then you have this 3-wave down, 3-wave up, 3-wave down, 3-wave up, potentially, right? You just range here for a little bit, and then you take out the low again, because, you know, in an ending diagonal, you need the 5 waves developed in 3 waves. So it's a 3-wave down, a 3-wave up, a 3-wave down here, 3-wave up, and then another 3-wave to the downside to take out the lows one more time here. So, you know, there's very, very much a possibility that's to form this ABC. So could you take out the lows again before getting the pump? Absolutely yes, right? If that is the case, then that has to be my entry. That has to be my entry then. So your C wave is just an ending diagonal. A, B, C. Ending diagonal and C wave. So still interested very much, even if we do not take out the low. If we do take out the low and get a reaction, I'll just have to potentially add to that position. So that's something that I am looking at the moment, either ending diagonal or that WXY as explained here, which is one of the scenarios that we talked about here early this morning, which we're moving down in a zigzag. So is there a bearish case? There always has to be a bearish case. Is there a bearish case that we just nuke down? What explanation would I give to you if we nuke down from here? And I'm like, wow, you know, we actually took the lows. I was, you know, confident that this higher low was going to hold. That scenario would be a multiple 1-2 setup, you know, which, you know, at this point I do see very, very low probability, especially with this high volume move down. You know, we love to finish either a ABC or a WXY with high volume. It is very, very common to finish with high volume, right? When you do take a look at this move to the downside, just to give you that example, when you do take a look at this movement to the downside that we had from $72,000 all the way down to 65.1, the highest amount of volume from this downtrend happened at the lows, right? The highest amount of volume of this entire downtrend happened at the lows. So when we do, you know, come to this movement to the downside that we had from Sunday, this downtrend, the highest amount of volume is happening here at the lows. It's a local low, at least for now, right? It could very much be the low here for the next coming days. So if you have that big movement with high volume and you do not get follow through from one of the previous lower highs because you are looking for an impulse, we've invalidated an impulse at the moment here. When you have that high amount of volume after coming from this downtrend, right? If you want to count here a 1-2, 1-2, or a 1, and this is an ABC running flat, doesn't matter. This wave needs to have a shallow bounce and one more low. So you want to see a 1, 2, 3, 4, 5. When you bounce and you overlap the wave ones, you automatically need to convert this into a high probability 3-wave structure, which means that you're likely, you are going to get that bounce here throughout the next coming days, right? So anyway, we kind of do the education as we go as well, right? As we go, we do the education. So I think it's very, very valid. Bit of a shallow pullback here. Let's go through the comment section. Somebody was asking about the Bitcoin dominance, but just going to check a little bit of the timing here. Yeah. Likely go higher in the next coming days. Feeling pretty confident about it. So getting into a small swing long and add to the position as we go in the next coming days does actually make sense. Let's go through the comment section, see what the legends are saying. 100K bears, 100K dollar bears. How do you see the macro? Great question. Much love to you. I'm gonna take a look at the macro. right away. Why not? Fear and greed index is at 10. I know, it's absolutely incredible to see the fear and greed index so low. We had extreme fear at 5 not long ago. This was actually a few hours ago. Macro, let's do a little bit of macro analysis. Let's count the local waves on the 1 minute for the entry. Absolutely. Yeah. Absolutely. I mean, preferably, you know, I want to see this. We just hit the 382 Fibonacci. It would have been nice to get a little bit of a deeper pullback here. I do think it's still very possible. Yeah, we're likely going to take out these highs already. This is likely 3-wave corrective. But yeah, getting a little bit more of a pullback. We just barely hit the 382 Fibonacci. But I think it's treating it as a swing long, you know, kind of makes sense. Treating it as a swing long already. But I understand, just because of my style of trading, of course, that we're unlikely going to come up to 70,900 like in a straight line. You know, I don't think this is going to happen in a straight line. You know, we move in waves, right? We do move in waves. So, you know, naturally, how we get up there, I think it's going to take a few days to get up there. So it's all about detecting this movement up right now as that first initial wave, right? And then get that pullback. But, you know, if you ask me, the probabilities are already high that we're likely going to take out 70,900 in the coming days. So it's all about managing how much are you risking, because I could enter a very small long position right now just to not miss on the move and add on that position as we do get, you know, confirmation, an impulsive move down. We are correcting to the downside in the next, you know, 24 hours, and I could just be adding to the position. But it does really make a lot of sense to take most of the profits as explained at the beginning of the stream. If you did short here, or if you did short here, or if you did short maybe here early this morning, that you want to start getting out and thinking of long positions, because this movement to the downside is high probability corrective. And this movement to the upside is high probability impulsive, right? So anyway, somebody was asking about higher time frame. So higher time frame, didn't know you were live, got into the trade at 66.7, knowing RSI 50-minute 1 hour, got overbought and a fin 7.8 Fibonacci. Your explanation on volume was good. Thank you very much. Much love to you, Sun Dog. So let's go. Andy, I'm in a short at 70.8k. Should I close my position? I have to say, you know, I've taken most of the profits. It's always nice to leave a position open, because then, you know, if we do move down to much lower prices, I kind of regret not having still, you know, a chunk open, be it 30%. I usually like to leave 30% for a swing. But you know, where we are at the moment, you know, I understand that, you know, we are rangy, and based on the information that we have here, I like that there's higher probability in taking out this high. So you might think, why aren't you taking all of your profit? I always leave a reserve, right? Be it 30% or 20% of that position, because I am wrong, and I've got a good entry. I'm also wrong, you know, a lot of the times, but longs are looking very much more attractive here. So I'm going to have to scale into a long position likely in the next coming days, because, you know, I have to say this was actually not a bad aggressive entry. Sometimes you either aggressive, and yesterday was aggressive entry and it's the best trade. Sometimes the aggressive entries are the best ones, and I need to give a shout out to Devil here because it was based on Fibonacci, and also, you know, I was just adding confluence on that short trade of yesterday, and I was very much very much confident that we were likely going to form something like this. A three-wave corrective structure, regardless, be it a WXY, and there's a bit of a, it's a bit complex. Very, very confident. And the main reason was this impulse, right? When you move in an impulsive move to the upside, you ain't going to correct down like this and then shoot up. The market just simply doesn't move like that. What is more likely is that you're going to, form a three-wave correction. It's going to take time before you actually reverse to the upside. So timing here was also very, very important regarding the impulse, regardless if you finish, here or here on that impulse, right? 1, 2, 1, 2, 3, 4, 5, 4, 5. And you got a very impulsive move down here. Finishing here, the only scenario would have been that flat, that you actually continue pumping here, but it was low probability. When you consider the timing, you always want to try and cross the 382 Fibonacci time. It did cross the 382 Fibonacci time. Okay. Sorry, my bad. It did not. I was thinking about this short yesterday. We did not cross the 382 Fibonacci time here on this low. So this low is actually very, very fast in time for the market to actually just pump up from here. This was an unlikely scenario to happen yesterday. One of the reasons, right? There's a couple of reasons here that I can explain. One of the reasons was time. You did not cross the 382 Fibonacci time. And that's the 382 from the impulse, right? So it's very, very shallow in time. And over 77% of the times after an impulse, over 77% of the times, you cross the 382 Fibonacci time. So after an impulse. So after a countable impulse, which we have here, 77 times out of 100, the corrective move crosses this orange vertical line, which is the 382 Fibonacci time. And that's high probability that you're going to finish the correction after the 382 Fibonacci time. So if you bounce and this is looking bullish, and you know that you're unlikely going to break through from here. Anyway, another problem that we had yesterday based on the bullish case scenario regarding that short position was, looking at this as multiple 1-2s to break out in a third wave and have multiple 4-5s, right? Form an impulse, literally. Something like this, right? Multiple 1-2s break out multiple 4-5s. The probabilities in moving like this right over here were low. And, one of the main reasons why is because the retracements right over here were incredibly deep from your impulse, hitting the 0.88 Fibonacci on every single higher low. That is more common for a B wave correction. That is more common for a 3-waver than actually getting, a multiple 1-2s that are so deep to then form 4-5s. This is very, very deep, and it's uncommon for multiple 1-2s. So, when you start combining, the time of this movement down from this impulse to then suddenly rally from here, low probability based on timing, and low probability that this is, starting an impulsive move to the upside. You just understand that, what we're looking at here is just very likely a 3-wave correction to continue here in the coming days. So, just a little bit of, how we detect the probability side of the movements. And that obviously, just makes you decide on the trading decisions at the end of the day. Anyway, let's go through the higher time frame, somebody was asking here about the higher time frame. Let's see if we do get some kind of a shady pullback here. Would be nice, because you know, I would be interested in getting into a position here on this pullback if we do manage to come down here to this high or the golden pocket. And I'm going to treat it as a swing, okay? I ain't going to go like extremely aggressive long with stop loss here. I'm actually going to go with the main scenario here of stop loss at the low and targeting, you know, 70.9k plus and even 72k. One chart that I need to take a look at is the S&P 500, because I know this was at value area low, and you know, I'm not sure if we're losing. We're getting a reaction actually. Okay, that's good. Yeah, S&P 500 is holding value area low, so yeah, this is going to be good for Bitcoin. S&P, I don't want to see the S&P 500 losing the value area low of this range of the last few months, because that means you know, Bitcoin is like an altcoin for the stock market. If the stock market dumps, it is likely going to drag Bitcoin. So we always like to consider where the stock market, where the S&P 500 is, because if the S&P 500 dumps, it's just like if Bitcoin dumps, you know that your favorite altcoin is likely going to dump as well. So the same applies here. Bitcoin is like an altcoin for the traditional market. There is that correlation, and I'm just so aware that this is likely going to take a hit at some point. However, it is uptrending still. It's just getting exhausted. So we've been bouncing here throughout the last few months and weeks, right? This is December, you know, November. A bit of a sharp one right there, but we're trying to hold the value area low here throughout the last few weeks, which can give you that bounce back to the range value area high, right? So could we bounce on the S&P 500 here, which naturally would help Bitcoin to get that momentum to the upside? You want to see this on the S&P 500 instead of losing it, because if this happens, then we are at the base though. So naturally, you would say we're at the base at the moment of the range. So we could get that bounce, and we could get that bounce for Bitcoin as well naturally, right? So just aware, I just like to take it into consideration where we are with the S&P. And when, you know, somebody was asking about the higher time frame, I think higher time frame is important, because regardless, if I do see Bitcoin hitting plus 70k, 72k in the next coming days, you know, I think there is a very, very good chance for that. You might think, is it going to be bullish? Will it be bullish, or will it be, you know, just another lower high on the higher time frame? So you're actually creating one more high here, but you're dropping down. Zooming out, we need to consider this still as the main option, looking at the 4-hour time frame, the movement down that we got from $98,000, right, which was on the 14th of January, as a potential 5-wave move to the downside. Still very much in the range. There's still a lot of time. This could morph into something much longer, and you know, naturally looking for that ABC movement as well, or a WXY double zigzag. But you know, I do believe that taking out $60,000 at the moment has higher probability, instead of getting a big rally, right, a big recovery in the next coming weeks. I think the bounces are going to be weak, and we, you know, at the end of the day, I am looking for $60,000 to likely be hit in the next coming weeks. Okay, short term, yeah, I mean, short term, very, very rangy still, with a little bit of more upside, of course. I mean, when we zoom in on the 5-minute, it does look like we've had some big moves, but yeah, we're literally in this range still, which is looking like a little bit of a triangle-y formation. But on the higher time frame, you know, the main idea here is this one. You know, an impulsive move down that is not finished. And the main reason why is because you know, the biggest move with the highest amount of volume, you always want to consider it, right? Give it priority as the wave 3, because that's the most common thing that happens. An impulsive move, you usually have the third wave being the largest wave and the one with the highest amount of volume. So as as that is the most common thing, that's how we need to label this for the moment, right? Lower time frames is all good and fun to get into intraday setups here, but it is actually still bearish till we hit the invalidation of this impulsive move down, which is the $78,900. That's taking Fibonacci from wave 2 to the wave 3. You don't want that wave 4 to go to the golden pocket, because wave 4s don't go to the golden pocket. They reject in between the 236 and the 50% Fibonacci, which is, you know, we already got a little rejection at 382. So I mean, this is the range where you usually get rejected in the wave 4. Wave, you know, 50% Fibonacci being the highest zone. You can get above it slightly, but not hitting the golden pocket. 50% Fibonacci is at $75,000. You know, I would be very interested in a swing short here. That we might get up there next week, right? I'm not saying that we're going to get up soon. I do think we could hit in the next coming days. It's possible, but it could even take another week to get up there. But I would be very, very much interested, because this is the main scenario here that we have from the last few weeks. We understand that this was the correction, WXY, bit of a bear flag, right? Just for the average Joe out there. Just a bear flag breaking down, right? And the impulsive move starts from here. The potential impulsive move starts from here, right? Which is 1, 2, 3. We still haven't finished our 4 and 5. And 4s can be just long, boring, rangy, right? Which is what we're getting at the moment, right? This is classic wave 4 price action. It's just dead cat bounce, very rangy. It can be very tricky. You know, and this is just like zooming out here. And if we do consider on the higher time frame, your wave 1, wave 2, wave 3, wave 4. I mean, this is if we do, you know, count the higher time frame on the daily. Let me just put this like that, and we'll zoom out here ever so slightly on the daily and talk about that wave 4, which is, you know, very, very long, and it's very choppy. It can be very confusing. In this case, on this wave 4, we had a WXY double zigzag. I have it somewhere over here on a folder. On this wave 4, we had a WXY double zigzag. We were very much analyzing this structure as high probability corrective back in, you know, December and January. When you do see 1, 2, 3, wave 4 was an incredible boring range throughout November and December and part of January, which is boring and long on the daily time frame, right? If we do consider this as the wave 4. So, you know, wave 4s, this is what happens. They get long, they get choppy. It can be a complex sideways WXY. And when we do zoom in on, you know, the lower time frames, this at the 4-hourly time frame in this case, when you do check from that lower high, you got 1, 2, 3 high volume, big move. This wave 4 could still be, you know, ranging for another week. It might look like that you're going to roll over from here, but you could still form another high and then move down. So, I mean, getting to 75K-ish is going to be interesting for a short trade, you know, at least for me. When we do take a look at this price action that we had, right? How many people believed that you're breaking a bear flag here, right? You're breaking a bear flag and you're just going to take out the lows. it wasn't like that for us anyway. We understood that this could still be morphing into something else, a very, very large range, understanding the higher time frame drop. But, right, this is the confusing part, right? You might think this is a bear flag and you're breaking out right now, so we should be testing the low. Well, surprise, we came all the way back up to the highs and then ended up forming a larger three-wave structure. And, this is what I believe is going to happen here. At the moment, it does stand with higher probability with the information that we got here that we actually take out 70,900 and even 72k. Naturally, of course, if you take out this high, you're likely going to take out this one, which will, obviously look for that three-wave move. What kind of three-wave moves could you have, form here? I mean, for me, one of the attractive ones is, either this being an ABC right over there in your wave W, and what we're having here is another ABC movement, forming that WXY double zigzag. I mean, this for me is one of them that could very much happen here throughout the next, we would have another week of price action literally, easily to get up there, because you need to move up in an impulse. An A wave and a C wave, right, moves up in a 5-wave move, right? A couple of 1, 2s, 3, 4, 5s, right? That's what you have in an impulse, literally like this A wave. That's one scenario that could happen from here in the next coming days. What is interesting is that we do have so much liquidity up there as well. The liquidity up there is pretty insane. Above 70.9, the recent highs that were formed on last Sunday. There's lots of liquidity all the way up to, I mean, you say it, right? There's lots of liquidity up there. So with that said, I mean, we've got shorts entering on Bybit. Hopefully we get more shorts entering to get that kind of short squeeze, which could be, similar to what happened back here in November, December. Because as explained of this range, let's get that WXY out of the way. Just get it out of the way. Naturally, coming from this downtrend bear market, if you're breaking trend and you're breaking a little bit of a staircase, right, you're breaking down, the liquidity that's going to be sitting in this zone is going to be pretty interesting, right? It is going to be pretty interesting. You think you're going to get that breakout, but you end up forming a larger three-wave structure. And there was a lot of liquidity here. Get people shorting at the lows. All these little bouncers, they want to short because they believe that they're getting the back test, right? And it's just going to roll over. It's just so downtrending. However, you get one more push up before moving down. So this is what I'm literally favoring here for the next, for the next coming days, really. Understanding that there is a chunk of liquidity here. So there is liquidity down here. There's liquidity on both sides, but overall, that's what I would be kind of interested in. I think if you connect a trend line from this low to this high, right, you would say we're breaking out, right? We are breaking out from here. And it's, as we're breaking this trend, does that mean we collapse from here? Well, absolutely not, right? Just the same as this trend right over here. Does that mean that you collapse because you broke this trend line, these higher lows? And you're going to collapse down after breaking this trend? It doesn't mean anything. So big support at the moment. There is that big support, value area low. little bit aware that the lows could be revisited. I need to give a shout out here to Devil because, you know, he pointed this out, that there is there is a possibility of forming a ending contracting diagonal, regardless if that does happen or not. You know, you could be forming an ending diagonal here in this very local ABC structure. Very, very local one right there. So I'm aware it could still be a little bit choppy. It could still wick the lows. Very much aware of this scenario where you're still looking for one more low, and then you want that low to react as a double bottom to then recover. If I would be, if I would enter a lot, if I'm long in here, this pullback, if I'm going to enter this pullback right now, I think what makes more sense is to put stop loss at the low. And depending on the movement down, what I want to see here is a double bottom. Then I would enter and stop loss at the low. Just in case the price breaks down from here, right? And goes to lower prices. But because I know I mentioned at the beginning of the stream about, this long position and having stop loss here. Remember that the risk management needs to stay the same regardless of where your stop loss is. If you're going to have a stop loss down here, this still needs to be 1%. 1 to 2%, right? That's your range risk. If you are going to take this long with stop loss at the low, this still has to be 1%, 1 to 2%. This stop loss still needs to be 1 to 2%. If you want to have a stop loss all the way down, right? Obviously the risk to reward is decreasing, but risk management, no matter how far away your stop loss is or how close it is, you always need to risk the same percentage range, right? And when I say 3%, that is really pushing it. Really pushing it. When I get into a 3% trade, which was the case of yesterday, that's like going aggressive. Long time. I don't usually go that aggressive. Maybe once a month. But, just for educational purposes only, right? Because I know that this industry is very, very difficult, and a lot of people would just blindly add to positions and risk more percentage than they are willing to lose. It's natural. It happens to everyone. It's happened to me many, many times in the past, and it's something that you fix with time and getting burnt a lot of the times, right? If you question yourself, I questioned myself my first couple of years. I mean, I started to go break even after 2 years of trading. Break even, okay, after 2 years. And I questioned myself, what am I doing wrong? And it was simple. I'm getting into these toxic trades and holding losses and adding to position and all of that. You know the answer because that's what you're doing, right? Anyway, much love to everybody. Hello, Suzanne. Much love. Shout out to Devil with yesterday's short trade position. I have to say, I'm looking for this long. This would have been actually a good catch. We do provide many scenarios and levels inside of the community. Sometimes we're out and about, sometimes we're in front of the chart, but I have to say this scenario would have been an awesome catch because it is one of the possible movements down. We literally bounced at the 66.6k level. That's where I had an entry here. We literally bounced at 66.6 here on this recent drop for this potential double zigzag. Not double zigzag, sorry, my bad. Flat in Y, flat in X, and zigzag in Y. Not sure if, you know, some of the legends did aggressively enter that trade. We'll have to check out later. By the way, if you are interested in joining the trading community, super simple to access. Devil provided this insane short trade yesterday at the 70k region. You know, I was already looking for a lower high in this zone, but with Devil's confirmation, obviously myself and him are there. We're looking at most of the times the same levels and same scenarios. And when you have double confirmation from two guys that have been looking at the Bitcoin chart for 10 years almost, right, and understanding of their movements, then you have your chance right now, of course, to join 2 months for free, guys, inside of the trading community. Just send me the word access. 2 months for free, guys. You basically need to sign up with one of the affiliate links, Bluffin, Velto, BTCC, minimum deposit for your own trading. It's for your trading, okay? Bitcom Namnia, much love, Suzanne, much love. Devult was a great short, my man. Did you see how we bounced out the one-to-one extension out of this potential WXY Devult? It's pretty insane that we had, you know, that we've got this potential where we have a flat here, a running flat, and a zigzag down here, basically, right, to form that WXY. You know, these are very complex waves. It's a complex way on how the price can move, but when we get this as a flat NW, running flat as X, and zigzag and wave Y, and you get the fib extension from the start of W to the end of W to the end of wave X, which is that running flat, you know, you cannot bounce at the one-to-one extension. You know, we actually provided this, but we get so many things ready, and we have meetings as well. And I have to say, it's an aggressive long entry. But if you have the confluence of the one-to-one extension with the valley area low as support, I mean, I have to say, it's just an aggressive sniper trade. What can I say? It's a sniper catch the low. I like to be patient a lot of the times, but I understand that being too patient can be bad as well. So now I'm really looking for that long entry here. Right, need to look for that pullback, need to look for the corrective move. So, you know, now I need to be patient for that. Anyway, much love Devil here in the comment section. He does the morning updates. You know how much I love those fib extensions. Devil treats them as a SFP zone, literally a sniper trade. You get the reaction, you start correcting slightly, entry, stop loss at the high, and he's very good at defending on these trades. Shout out to you, Devil. He does the morning updates, guys. We got over 500 people watching at the moment. The morning updates. Check out, subscribe to the channel, guys. Devil does the morning live streams here on the channel. Much love to Devil. He's an absolute legend. Do you have any scenarios on that BTC will do a C wave below 65 instead of taking out 70k region first? Right. Yeah, obviously we need to have some, right? We've only been looking at bullish scenarios mainly, man. I would have to do the walk of shame tomorrow if we get a dump down below 65k, right? So, I mean, we need to talk about it. We need to talk about it. I mean, yeah, naturally, that's a very good question. You know, we've been talking about mainly most of the bullish scenarios, but there has to be a bearish scenario. There is a bearish scenario, which the high could be in here with this impulse. I know you might think, well, this is an impulse, which is what I see on the chart. Smash up the like button, by the way. We're going to talk about the bearish case because we can't only be bullish. I know bullish seems a little bit more, you know, my favorite scenario. However, we need to talk about the bearish because it is very possible, even though it doesn't look great on the chart, but it doesn't matter if it doesn't look great. You know, low probability scenarios do happen, right? They do happen. And of course, we need to talk about them, right? Smash up the like button if you do enjoy the content, the education, guys, and the possible scenarios that could happen for Bitcoin, because we were almost above 500 people watching the stream today, and I've only got 190 likes. So I'm going to go around the table, go through the comment section, and let's talk about the bearish case eventually, right? We can not only talk about bullish, we need to talk about the bearish. I would be more than happy if the price nukes down from here, really, because I'm not in a long at the moment. And I'm mainly holding the short. But anyway, let me go around the table, take a drink of water, and let's get that like to 250, guys. Thank you very much for being here on the live stream, and I'll go through the comment section right away, okay? Okay, let's go. Thank you very much for the support and the likes being smashed. Much love to everybody. Much love. I see a bunch of newbies here, says Meme Cat. It's okay. We've all been newbies at some point. It's all good. No bearish anymore. Let's go up. Yeah, we like that. I actually didn't create a poll here today, guys. Let me just create that poll. Next 7 days for Bitcoin. More up or more down, guys? Next 7 days for Bitcoin. Let me know your votes right away. Let's get the sentiment of the people watching the stream, right? Next 7 days for Bitcoin. More up or more down? Let me know your thoughts. Are you feeling more bearish for the next 7 days, or are you feeling more bullish? Let's go through. Getting an interesting dump nut right now. Interesting move down. Interesting move down, which we might just get a local reaction here at the golden pocket. Might get a local reaction. I'm very much aware of checking the S&P 500. S&P 500, it is slowing down and chopping from here. I would not want to see the S&P 500 losing here. Tomorrow's a very, very big day. Tomorrow is a big day, guys, of news. I think I'm going to have to do a live stream tomorrow. Tomorrow, Wednesday, we do have lots of news. Also, FOMC minutes. Lots of news tomorrow here. That's at 11 p.m. UAE time. So, housing starts, building permits, durable goods. We've got lots of news tomorrow, so it's going to be an interesting day. Right, let's zoom in. Bearish case scenario. I almost forgot about that. Bearish case scenario. Shout out to Joan, by the way. He did point out here how there is a chance for this to be the high. There is a chance for this to be a three-wave WXY sideways correction, which I don't like very much based on timing, based on timing and fib extension targets. I don't like it very much, but it is very, very much a possibility. It is countable. There's no invalidation, and the wave count is possible. That would be looking at this movement to the upside as a wave W in a zigzag, and this a wave X, and this a expanding flat in your wave Y. So in a nutshell here, what you have is a three-wave move, ABC, a WXY double zigzag here in your wave X. And this is lower time frame. We ain't going to do that. and then a flat structure, which is very possible here. As this was impulsive, how can you finish a high here without taking this high in an impulse? Well, the only way is if you do have a potential flat. So unfortunately, we do have a bearish case scenario of this being the high, and we roll over in the next coming days, next week or so, down to the lows of $60,000. That there is that bearish case. I would have to be foolish if I said it's not going to happen, or I can say there's lower probability based on timing, Fibonacci targets, and rest of it, but and more in based of the information that we have here. But it would be foolish for me to say it's impossible, it's not going to happen. We are going to get a bounce. By the way, I didn't do the disclaimer today, guys. This content is for educational purposes only and is not financial advice. The information provided is not guaranteed to be accurate or complete. Always conduct your own research before making any financial decision. I thought this disclaimer thing was not, apparently, you know, it's important. We've got some AI bots watching the content on YouTube, so I want the AI bot to actually listen that I'm actually saying that, right? So just in case, I did get a strike a few months ago from YouTube providing dangerous content. I was like, whoa, not me. Anyway, this bearish case scenario, you know, if this does look likely like an impulse, you might think, well, you know, if you don't take out the highs, if you take out the highs, then that's okay. You have a 5-wave move to the upside, correction, 5-wave moves to the upside. You're taking out the highs, A, B, C, perfect, you know, then you can roll over. But if you don't take out this high and you finish an impulse, you need to have a combination of something that gives, you know, provides you that possibility of finishing a high here, a lower high in an impulse. Because, you know, that's the kind of, you know, very, very rare to see a 3-wave structure that doesn't take out the A wave. Like, this is like, you know, super, very, you know, you don't see this hardly. And then roll over. Obviously, a triangle is different, but you would need one more high here and then down. You need 5 waves in a triangle. So it doesn't make sense, you know, to finish here, unless you have a sideways WXY where your Y is a flat, which, you know, it is countable naturally. So with that said, bearish case scenario here would be forming multiple 1-2s, which, you know, I do have a little bit of an issue here with multiple 1-2s. You do have an impulsive move down. That's all good and fine. Wave 1. You do have here your 3-wave up. However, you got a 3-wave down. So, I mean, this is, for me, this is not an impulsive move down. It's a very, very 3-wavy on the lower time frame. So I need to combine this as a running flat. That would be your wave 2. If I put wave 2 here and there's a wave 1 and 2, this actually looks a little bit more impulsive, and this does look corrective. So I need to combine a running flat here. You know, I don't have another option. So I need to put wave 2 here. I could not put wave 2 here because then, you know, you would have to say this guy has no fucking, excuse my language, no clue about, you know, edit wave theory, right? So I could not label this as a wave 1 and a wave 2. I can't. You know, it's just, for me, it's not valid. This is a very, very clear 3-wavy. So naturally, 3-wave up, 3-wave down, impulse. Yeah, I need to put my wave 2 here. That is the ultimate invalidation. Confirmation that there's, once you hit this level, there is very, very high probability in taking out 70,900. Because that would literally invalidate the potential of a 1-2 and a 1-2, even though this already doesn't look great for a multiple 1-2. Okay, and I have to say, I'm going to jump into that swing long. I'm going to jump into a small position long here because we have pulled back quite a bit, and I'm happy for that swing long attempt where we are at the moment. We got the pullback. we did get the pullback, getting distracted here on the higher time frame. Came down to this base. I like it. I like it very much. Just for a better entry, just not to enter here and entering on the pullback. Want to get into the pullback. And hopefully I can make this position large enough in the next coming days. Stop loss at the lows here, basically, with my percentage requirement, and depending on how we move here in the next 24 hours, we'll consider in adding to that position, and the target zone would be taking out 70,900. So still in the shorts, naturally, of course. You know, that's the thing about hedging. With the bearish case, going back with that with the theory here of this being finished as a WXY, zooming in on the lower time frame, the only way I can, you know, really label this is this being a wave 2. And naturally we break down, you know, in the next coming days very aggressively at some point with a wave 3, right? You just nuke down, you lose the level, you lose the value area low, and you know, it's time for the bears to continue the bear market, right? We've got good support here. Got good support. We've got many reasons to believe that this is corrective. Many reasons to believe that this is impulsive. And, you know, we've got different combinations to actually form that 3-wave move in the next, you know, week or so to finish. So there's a lot of reasons to believe that, based on support, based on Elliott wave theory. You got shorts entering here on. Oh, there's actually longs entering here on Bybit. But yeah, there's many reasons to believe that, right? So anyway, going back with the theory here of breaking down in multiple, you know, in a 3rd wave at some point, right? We just absolutely lose it. One thing that would be against all of the technical analysis and the probabilities is the S&P 500. And the S&P 500 is really at a very crucial zone at the moment, which I would want to see it bounce from the lows of the range, just like it did throughout the last few weeks, even months. This is going back to December, January. You know, you want to see this zone hold. It would be okay to maybe wick to the low here, but I want to see that bounce naturally on the S&P 500. And I understand that the S&P 500 is not long left to get a decent higher time frame pullback. I understand that we could be weeks away, maybe days away, because when you take a look at the S&P 500, the last few months, this uptrend momentum is really flattening out. As you can see, it's really flattening out. Okay, so I know it's a matter of weeks, maybe even days, that we actually get that breakdown from this momentum, because the momentum is getting lost here of the uptrend, you know, that we've had throughout 2025. It is really losing that uptrend momentum, and I think it's just a matter of time that we do get that pullback, regardless of how many times we test the highs, maybe in the next coming weeks. This is going to affect the price of Bitcoin. You know, this correction on the S&P 500 would naturally power, obviously, the move down for Bitcoin in this bear market that we are in, right, on Bitcoin. So going with the bearish case here, this would have to be you know, multiple local 1-2s, even though I don't like them too much. but it doesn't matter. It's not about if you like it or not. It's the probability side of multiple 1-2s happening from here is low, because you got the largest move down here. So you got, this would be 1-2, 1-2, another 1-2, or this would actually be a 1-2. You got an ABC flat, and then you have another 1-2 here, a bit aggressive, and then you break down in a third wave here, or you form another 1-2. Right? They're a little bit too sharp, high volume. It's not high probability for this to happen based on the second 1-2 here, which is aggressive with high volume compared to this 1 and 2. So you like your 1-2s being a little bit smaller or similar in time and price action before you get the wave 3. You don't get a small 1-2 and then a large 1-2 and then even another 1-2 like this and then break down. That doesn't usually happen on 1-2s. So, well, this is how I would have to count this. Clear impulse, correction, clear correction down, impulse up, so that has to be a running flat, and then the multiple 1-2s here, which this 1-2 is extremely longer from the previous one. Not high probability, but this would just have to be, if it were to move down from here, right, in the next coming hours, this would have to be the count. I would have to say, well, it was low probability based on these 1-2s here, but it would have to be the count that needs to be applied. But it's low probability. So as it is lower probability, longs here for the bounce are looking interesting, right? Despite a bit of the noise, maybe test the lows again. But that would be based on this WXY, that it is, could be finished here. If you are going to start a major breakdown, you'd need to fit 1-2s here, because there's no impulse. The only impulse that you have is here locally, but there's no big impulse 5-wave structure here. So it would have to be multiple 1-2s building up. And it looks ugly on its own. It looks bad. It looks very, very bad. I cannot get a wave 2 here and this being a wave 1 and 2. I refuse to do that. I refuse to do that because I'm sticking with this being a 3-wave structure. So ABC running flat, wave 2 here. We need to form some kind of another 1 and 2 in this zone, which already is looking bad. It's already looking bad for that. So probabilities are decreasing here for this to be a 1, 2, another 1 and 2. This one has high volume. It's low probability. However, low probability doesn't mean impossible, right? You'd have to, this is where risk management comes into place, right? If you are looking for this bounce in this region. One other scenario that Dewalt pointed out here for anybody that was didn't join before on the stream is forming that ABC here, because we plan many things in advance. We what if we take out the lows again, right? Because I'm like, this could be a WXY as explained, where you have a flat, you have another flat here, and here you have a zigzag. This has the potential of being the low. It has the potential of being the low. Same explanation that we gave last week. This has the potential of being the low. This was posted last week in the inside of the trading community, where it has the possibility of being the low. And I'm talking about this pivot right over here, right now. Was also, looking at this move coming down to the low 65k region with a WX. We've got one more zigzag down, come down here to the 65k zone, create a little bit of a range, which is what we did right on the 5-15 minute time frame. Then we got the rally here. So everything points out in this case that kind of something very, very similar to this. Lots of overlap. Do we have 1-2s here? Doesn't look that great. High volume in this movement down. You know, it doesn't look great for multiple 1-2s, especially with the new information that we have here. Very locally, right? With the latest move down in the last 24 hours. Just doesn't look great. A corrective move fits in better. So anyway, let's but anyway, that would have to be the bearish case. That would have to be the bearish case. 1, 2 in your ABC flat, and you got one, you know, another 1-2 here. This large move being another 1-2, you're still forming a lower high. The moment you would clearly invalidate the multiple 1-2s here would be taking out this lower high, which, you know, we missed out by. But that would be the probabilities are low still, but this would be a clear invalidation hitting 68.3. You know, the moment you take out that lower high, it's just high probability that there's no 1-2s here on the formation, at least with this local move down. One scenario that Devil pointed out, which actually, you know, takes out the low again, which, you know, does look pretty decent. I wouldn't say that this is the wave 4 in here already. I think, you know, what would make more sense is, you know, to get that movement up again here to form a local kind of 3-wave structure and then get another 3-wave down. And I mean, that's literally looking at an ABC here. And sorry, my bad, that's taking the B wave from here. Yeah, you know, very much still one of the scenarios before we get the bounce. Getting one more low here. Is very much a possibility still. So, you know, you might, you know, range a little bit, maybe take out these highs. You might think, well, that's bullish. Then you take out the lows one more time, and then you get the bounce. And, you know, you're still looking for an ABC, still looking for a 3-wave structure. However, your C wave formed an ending diagonal. So, you know, very much aware of this, you know, double bottoms in the next coming hours between today and tomorrow, you know, could be an option here. Could definitely be an option before getting that relief, that big rally. So just gonna have to be paying attention throughout today and tomorrow. Obviously, you know, you do have the invalidation level here as well, based on impulse correction. If you're treating this as a swing and a chilled position, right? Sometimes we focus too much on the lower time frame to get that really perfect entry. And I have to say, yesterday was one of the best to get one of those sniper trades here, to get this movement down of a few $1,000s. It was a very good. It's just everything, you know, the planets were aligning based on confluence here. And we did hint this on YouTube, you know, a few days ago, that we are looking for kind of a 3-wave move here in the next coming days. So yeah, will the value area low hold? For me, it is higher probability that we do actually hold this region, and looking for a bounce here in the next coming days. Much love to everybody. Thank you very much for joining today's stream and smashing up the like button. Hope you enjoyed the education. Manage risk, guys, on your trades, okay? Much love to everyone. I am taking this attempt, smaller position, having my stop loss at the lows. Obviously, still have that short position, very aggressive short. I actually like this short very much. This long position can be built up throughout the next coming days, and obviously inside of the trading community, we'll be informing about how I'm handling this trading setup, guys. If you are interested to join the trading community, where we do provide daily updates, possible movements, information on the setups, make sure to join. You do have the Telegram down below, guys. Just send me the word access, and super simple. Join one of our affiliate links, sign up, do a minimum deposit for your own trading, and we'll get you a few months for free inside of the community. Legends, thank you very much for joining, smashing up the like button. Distance, music, everybody, have a great rest of the day. And let's see what happens in the next 24 hours. Thank you, and I'll see you in the next one.